Hello, I'm Max, the founder of RevTech. This is the recording of a talk that I gave at the Block Zero conference the day before Breakpoint 2025. The talk was not recorded, so I'm just going to record this for anyone that might have missed the Breakpoint conference. So what we'll cover in this talk, we'll give a REV overview for the past 2 years on Solana. We'll talk about validators' point of view, and we'll talk about stakers' point of view, and a little bit about what's next. All of the charts you're going to see are coming from Blockworks. So if you're watching this video a few months after December 2025 when I'm recording it and you want to see the most up-to-date information, you can just head over to Blockworks. To get on the same page about what is REV, we're talking about real economic value. Primarily, we're talking about priority fees and Jito tips. Priority fees, of course, are Solana's native fee-paying mechanism, and Jito tips are the fee-paying via Jito's bundling infrastructure. This chart's from Solana Compass. It shows that the total revenue, most of it is priority fees and base fees. Of course, validators are keeping almost all priority fees at the moment on Solana, and half of the base fees, the other half are burned. The Jito tips are primarily going to stakers, and validators also do take a small commission there, as does the Jito DAO. So you can see the validators are earning the large majority of fees on Solana, as we'll talk about more in a second. So Solana had its moment in the sun toward the end of 2024 and beginning of 2025, overtaking Ethereum in the middle of 2024 as the most valuable chain measured by network revenue. And it kind of held that place until the middle of 2025 when it was overtaken by Hyperliquid. And now with falling REV on Solana, it's also fallen below Ethereum. So if we look at the last 2 years, I've just drawn a black line in between 2024 and 2025 just to help visually here look at the past 2 years. So we see that the all-time high REV produced was January 2025 with over $500 million produced, which is quite an astronomical number if you consider that's all transaction fees of various types being paid by users and bots on chain. Of course, it's declined a lot since then over the course of the year, but still, with a double-digit million per month REV number, it's still not completely insignificant, I would say. So if we break this down into Jito tips and priority fees, you see that it was a more or less 50-50 split throughout the course of the year. Over the course of this year, Jito tips have declined relative to priority fees. So as a percentage, the Jito tips, they used to be over 50% of REV. Now they've fallen to somewhere around 25% at the end of November. If we think about why this might be, trading is obviously driving a lot of the fee paying on Solana, specifically on-chain trading through decentralized exchanges or DEXs. So if we look at DEX volume to maybe see if we can find any clues here. DEX volume hasn't dropped off in the past few months to the same degree that REV has, but if you look at the DEX volume from meme coin trading in purple, we see that visually, at least, we see that relationship here, which makes sense because meme coin traders are generally accepting higher slippage on their trades. Their assets are very volatile, so they're a bit less sensitive to the trades the fees they're paying to make those trades happen. So as a percentage, if you look at the Sol stablecoin percentage of DEX volume, it's now over 60%, which is up from just over 30% at the beginning of the year. And the percentage of volume from memes has fallen quite dramatically from over 60% in the middle of last year down all the way to just over 10% at the end of November of this year. So if you divide the total DEX volume by the transaction fees, you can kind of see that the percentage of DEX volume from ordering fees has fallen from a peak of 0.2% to below 0.05%. So just another way of visualizing this falling of fees overall. So if we think about the validator's point of view, if you're a validator watching this, you're probably familiar with your source of revenue over the past 2 years, but most of it has come from transaction fees here in gray. Validators still are earning a small amount from issuance, so that's the commission on the inflation, the creation of new Solana tokens in green here. But the GTO commission has really fallen a lot as GTO have fallen. And this has also pushed up the amount of break-even stake that validators need on the network. For validators running 0% commission rate, they now need over 117,000 SOL staked to break even because of those reduced transaction fees that they're earning. This has also caused the number of validators to fall from almost 1,400 validators at the beginning of 2025 to, I believe the most recent number is actually now below 800. Let's think about the staker's point of view. So I mentioned that GTO tips are primarily flowing to stakers and priority fees are primarily flowing to validators. So as GTO tips have fallen, we've also seen that stakers are earning a smaller share of REV. So they used to earn 2/3 of REV at the beginning of the year, but now they are earning closer to 1/3 of REV at the end of November. During the period of heightened REV, stakers APY here in green actually increased. At the peak, it was above 10%, but as that real yield here in purple has decreased, we've seen that fall. Now the staking yield is below 7% for the first time on Solana. Interestingly, the decline in staking APY hasn't really changed the percentage of SOL that is staked. It's hovered around 2/3 of SOL staked for the past 2 years and even longer, actually. Um, Meanwhile, the percentage of SOL that is liquid staked has risen slowly over the past 2 years, now around 10%, still below where it is on other networks like Ethereum. Um, the growth of this could help a lot with validator decentralization, among other things. But it's interesting to see that the changing staking APY doesn't really seem to have a direct effect on these two metrics. So what's next for Solana and REV on Solana? SIMD 123, so the Solana improvement document that was voted on earlier this year alongside SIMD 228. Some of you might remember that. But SIMD 123 is going to allow validators to directly share priority fees with their stakers. So validators will be able to set a commission on their priority fees and pass back priority fees to stakers. Not sure when the exact ETA of this is. It seems like the ANZA team has discovered some other kind of dependencies that they need to sort out first, but you can check this on GitHub. Now, it's actually possible for validators to share priority fees already. There's been tools in the past from Sanctum and validators creating their own tools to share priority fees, but GTO has upgraded their tip router, which is maybe the most transparent and safe way to share priority fees. So validators can now share not only GTO tips, but also priority fees through the GTO tip router. So taken together, I think especially after the implementation of SIMD 123 enables validators to share priority fees, all validators to share priority fees with all of their stakers. I think we're going to see validators sharing more REV upside with their stakers and validators charging a higher commission on the issuance. So if you think about the validator as a business, they enjoy having higher revenue when there's more activity on the chain, but most of their costs are fixed costs. Perhaps they'd like to buy hardware or hire people, and having a stable revenue from charging a higher commission on issuance will enable them to do that. So I think stake pools and the Solana Foundation delegation program will have to adjust their view of validator APY and adjust their maximum commissions that they allow to enable this new normal. Because currently they all assume that the validators are keeping all of the priority fees and then they enable or they enforce a maximum commission on issuance and a maximum GTO tip commission accordingly. So I think we'll see kind of a rethinking around economics once SIMD 123 comes into effect. Now, the long-term vision for Solana, I think everyone agrees that we need to grow sustainable demand for block space. This is especially going to align with the goal of bringing NASDAQ onto Solana. So bringing stocks on chain, prediction markets, other use cases, all of these activities should increase demand for block space and can also lead to a more sustainable revenue for independent validators. Um, there's always a give and take between demand for block space and supply of block space. And during the periods where demand outstrips supply, obviously you have people bidding to ensure inclusion of their transactions in the next upcoming block. But for the Solana network, independent validators having sustainable revenue is really going to ensure that there's a good amount of decentralization, a good amount of strength and resilience behind those validators, and keep the network safe from DDoS attacks and other kind of decentralization related problems. And finally, what I'm most excited about is making Sol a source of real yield. Even with the current, 2% real yield and double-digit million per month REV, Sol is still an interesting uh, um, asset to gain a real yield on, and is still head and shoulders above other chains. And I think the way we do this is by preserving as much REV upside as possible for stakers. And this will also enable new products. So if you think about staking yield, which pays out stablecoin payouts, we've seen a few of those products recently, as well as fixed income products potentially once the issuance reaches its final fixed APY. To this end, we're building RevTech, which is going to be the first dual liquid staking token staking protocol, which will concentrate REV and issuance yield to two separate tokens. So RevSol will accumulate yield from REV, from transaction fees, and ISS Sol will accumulate yield from issuance, from the inflation. And I'm going to record a talk that I had, a breakout room talk at the conference as well. So if you're interested in that, I'll probably put the link in the description of this video. So in summary, Solana's REV has declined in 2021 and stakers' share of REV is falling, but the vision is for increased demand for block space and fairer distribution of REV. SIMD 123 will enable a new normal, which will normalize this, and RevTech is ready for this new future. So if you're interested in learning more, you can go to revtech.fi, or we're on Twitter, revtech_fi. You can scan this QR code to go there. So thanks very much.